Hello, YouTube. My name is Joshua Brukenthal. I am from Montreal, Quebec, Canada, and this is my first YouTube video ever. So, I am a day trader based in Montreal, like I just said. I am 22 years old currently, and I've been day trading for 3 years consistently every day. Of course, occasional breaks here and there, some time off, but it's been fairly consistent over the last 3 years. Over these last 3 years, I've dedicated my entire learning to ICT concepts. I started off with his 2022 mentorship and also a good chunk of his 2023 mentorship. And those are the two primary teachings of his that I use towards my trading. You'll see those concepts illustrated in the charts over yeah over my YouTube videos. And yeah, today I'll be going over a trade review I did. This was not a 1 to 1.9. I only utilize a 1 to 1, so it was a winning trade today. But I just want to say quickly, talk a little bit about what my goal is with this YouTube channel before we dive into this trade review, and a little bit of what I have planned for 2025. So, as a Canadian resident, I've mainly focused on CFDs and forex oriented prop firms over the last 3 years, which I've had some success with here and there, but mainly failures. Prop firm market is ruthless and it's cutthroat. But nonetheless, I've still traded my personal account and have gotten good results from my personal account. So I feel like in general with this YouTube channel, I just want to provide a source for struggling traders, specifically algorithmic traders, ICT traders who who are either struggling to find their edge or just need someone to relate to in tough times. I'll be posting everything I go through here on this channel. Um, Another reason for this channel, considering I'll be posting everything, is to hold myself accountable. I'd like to eliminate as many mistakes as possible. Over the years, I feel like I've done a good job eliminating certain mistakes, but I think we could all relate to the fact that we all have our vices and we all find ourselves coming back to the same mistakes most of the time when it comes to trading. So, my goal in 2025 is to really solidify myself as a full time profitable day trader, to really start having that full blown confidence in myself that I could make money out of these markets. So, well, we're gonna start here on the daily. Actually, we'll start on the weekly time frame here for my trade review. And as we talk, as we go through this trade, I'll be talking to what's going on here. What the hell? There we go. All right, so starting off on the weekly time frame, we could see this here. Let's grab this rectangle right here. We could see we had this fair value gap inverted on the weekly time frame. We also had a break below a swing low here, and we actually had a beautiful retest of this inverse fair value gap. So in general, on the weekly, we are pretty bearish. Considering we're bearish, we do like how the week started here. We did have a push lower, kind of created some even more relative equal lows in relation to these lows here. We do have this we do have this low resistance liquidity here, which I do anticipate being run. I mean, realistically, it could run it this week. I would like for it to run this week, considering my bias is bearish. But since this is a weekly PD array, it could always take a little bit more time. So yeah, this might, well, first of all, yeah, my trade was on S&P. I do trade S&P and NASDAQ. So yeah, that's the weekly. Overall, we did want to see expansion lower into the weekly time frame. Let's go down to the 4 hour. 4 hour, not much to be seen here. We did have this fair value gap here. Didn't really anticipate it getting filled today, which it didn't. Yeah, we'll drop down more into the 1 hour, which is where 1 hour is mainly my bread and butter time frame. This is where I like to see one of my high time frame PD arrays display, so I could start looking into the lower time frames for an entry. We did have here this new week opening gap, a swing high created around the new week opening gap, and a subsequent push lower after the new week opening gap. One thing quickly, I'll go back onto the daily quickly just to display something here. We actually didn't even touch into the weekly yet, but we could see that weekly liquidity pool right here. But what we could also see on the daily is we do have this order block here, this down close candle, which has been holding very strong over the last month or two. We've gotten some nice pushes off of this. What I wouldn't really call this a breaker, it's an order block, but I do really like one of my favorite high time frame PD arrays is this kind of swing high created, violated, push lower, and then a aggressive push upwards, which is pretty much just a change, not a change in direction, but a change in order flow, as you can see here. So this is one of my favorite confluences. It is technically an order block. Sometimes it's a breaker, sometimes it illustrates itself as a breaker, but it's more or less of an order block. So yeah, so going back to my actual thought process for the trade, considering I was bearish, we were really deep into this order block, and we did have a inversion fair value gap here, which wasn't necessarily respected all that well. It was pushed through fairly aggressively. You could see in previous days it was respected very nicely, and we actually had to push through it here. So I didn't really anticipate too much of a bounce off of it, considering that. Also, we did have, like I said, this relative equal lows here, which we're targeting. 1 hour, we just went through. One thing I would quickly like to talk about, and I'll be talking more in depth on my model in coming YouTube videos, but I do mainly develop a bias off of weekly expansion. So I try understanding if we're most likely going to expand upwards or downwards for the weekly candle. I do use some fundamentals, I guess. Little to no fundamentals though. And the main thing I use is new week opening gap and understanding institutional order flow through new week opening gaps. As time goes on, I will be posting more educational content related to new week opening gaps. It's honestly what I believe to be the most underrated ICT concept. I feel like too many people are focusing on order blocks, fair value gaps, and liquidity I wouldn't say is underrated. I feel like liquidity is one of the most important tools you could have, but pairing liquidity with new week opening gaps is just like, it's a gold mine. So yeah, that's pretty much the main PD array I had from a higher time frame perspective on this trade. Was the liquidity pool down here, which we didn't even touch, but we don't need it to touch. We just need our lower time frame confluence to display itself, and we understand the probability of our trading system to hit. So let's go down now to the 5 minute, and here once we get down to the 5 minute, we're gonna start incorporating NASDAQ 2 to understand a little bit more why we entered the trade here. As you could see here on the S&P, we did have prior to the 12 a.m. opening, we did have a some market we did have market structure here holding bearish, so we had a swing high created into this fair value gap, aggressive push lower. Then we came up, we consolidated a bit, we took down in this low here, so we grabbed sell side liquidity. We went back up, grabbed buy side liquidity above this low resistance liquidity run in this fair value gap. We did respect this high, did not push above this high, And after that, around London session, we started having heavy downflow, heavy price action downwards. So in general, when I do trade and I have a bias, let's say as of today, my bias was bearish. When I am bearish, I do like to see a PO3 form, which would be, let me get here. Let me get this tool out here. I'll get the brush out quickly, which would be like here. Let's say we have here open, high, low, and close, which you can see here. It's like we want to see open, we want to see a high put in, then we want to see a movement lower from that high, potentially a push lower, and then we want to see a close a little higher like this, because this is mainly what we're looking for here. So let's get rid of that. So yeah, we did have that, which was already a nice confluence. And prior to the 8:30 a.m. open, we did have smart money divergence between the two pairs, as you could see right here. So going into that, we put in the 8:30 a.m. open here, SMT, and now we're really just looking for our high time frame bias to display on the lower time frame. So we're looking for a we're looking for the external model to match with the internal model here, which is exactly what we had on the 1 minute time frame. It was a Monday. It is a Monday today, so there wasn't necessarily the most news. We had, I think, some medium impact news around 11. But I did somewhat anticipate a choppy morning after we had some pretty aggressive move lower. As you could see throughout the London session, we kind of dropped down fairly aggressively. So here, once we actually have this push lower, this here is a beautiful this is a beautiful entry. It is before 9:50, so I do not trade up until 9:50. I wait for that first macro after the equities open. So considering my model, I would have probably, if this happened before after 9:50 or 10, which is the silver bullet, I would have probably been in here. I'm not sure if it would have met my 50% level. Yeah, so chances are it probably wouldn't have met. I don't think I would have anchored it here. This is too tight for me. Way too tight for me. Probably here from this swing high. And our displacement was technically right here. Displacement was below this low here. So yeah, this trade wouldn't have worked out well for me either way. Not that it wouldn't have been a winner, but it's not a trade I would take before 9:50. I do like seeing a little bit more price action and manipulation before I enter, which is exactly what we got. We had somewhat of a six sister between these two. So as you could see, once approximately around 9:40, we had a very, very large displacement towards the upside here on ES. Displacement, fair value gap respected, and there we push above the 8:30 a.m. open into the 12 a.m. open. So now we've cleared all the liquidity above the 8:30. So all of those sell positions are out. We've also retested the 12 a.m. open, further justifying the PO3 PD array. And after that, what do we have? We have a push high, swing low created, push above the swing high here, and then we have displacement below with a fair value gap. So once this displacement occurs and we have the fair value gap presented here, I pull out my fib, mark it from high to low, look is the 50% is the fair value gap in within the 50%. If it is, then we are good to enter. So here in this case it was, we are above the 50%. So I do put my entry right here at the beginning of the fair value gap. I do have my stop loss above the swing high, and I target a 1-to-1, which is exactly what we did here, and we won the trade. It went directly to our TP. Now in this trade, I personally only trade 1-to-1, but some people like having targets. They like having like a take profit system with their targets. I find 1-to-1 to just be the best system for me. With my with my emotions and the data I've collected as a trader, I just feel like the 1-to-1 suits me best. But for all other traders out there, first partial, considering the anticipated consolidation, I would have taken a partial at 50% of the range. So if you go from this range to here, you could have taken your first partial at 50% here, so approximately a 0.5 to 1. It's too low for me, too low for some other people. Totally understand. After the 50%, honestly, considering it 50% was so close to the 8:30, you might as well just call your first partial the 8:30 a.m. open. So I would have taken my first partial at the 8:30 a.m. open. Second partial, I would have put right below here, which is this internal low here. And ultimately, you could have targeted the low here or the external weekly lows here, which didn't hit yet. Kind of makes sense. It's Monday. Like, we don't expect such a strong and volatile PD array to fully get hit on Monday unless we're anticipating a strong reversal, which we're not really at the moment. So yeah, 1-to-1 trade here. Now, this trade, let's take a look on the 1 minute on NASDAQ. If you were to trick this trade on NASDAQ, if I'm not mistaken, it would have worked out well for you too. Now, yep, right here. So let's go right here. Low. Yep, seems like this would have worked out nice. Actually, here you had the 8:30 a.m. open within the fair value gap. If we go short here, boom. Also, guys, one thing I would just like to pinpoint quickly, if you have a open price, like an 8:30 a.m. open or a midnight open within a displacement, that is probably the best sniper entry you could get as an ICT trader. Over the last 2-3 years, I've had some, even if I trade 1-to-1, like, I'm not looking for like a 1-to-7, 1-to-8. Some of the best confluences I've just noticed from the data I've collected is around these levels. They are great liquidity levels if there's swing high and lows resting above or below them. But in general, they do serve really well as just entry points. So as you can see here on NASDAQ, 1-to-1 would have also been hit. You can see that displacement here. We would have also hit our second target here for approximately a 1-to-6, 1-to-7. And here you would have ultimately hit a 1-to-2. If that's what you target, your 1-to-2 would have been hit. But like I said, I just go for the 1-to-1s. So yeah, that's my trade review for today, Monday, January 13th. Thank you for watching. If you are watching, I do plan on posting a lot. I plan on posting all my trades. I plan on posting some days where I don't trade, just general market reviews. Some days where we may have marginally made trades, meaning we could see a high time frame PD array, but not necessarily see the entry model on the lower time frame, vice versa. I'll be posting some educational content in terms of, like I said, new week opening gaps, some other concepts. And I'll also be maybe posting some psychological stuff here and there, in terms of how to really stay grounded as a trader, which is something I'm working on still. I think everyone's working on it. Even the best traders, like my mentor, ICT's probably still working on that. I don't think there's ever a time when you're never not working on your psychological game when it comes to trading. So yeah, I'm really excited for this journey that's ahead of me here, and I'm glad to be sharing it with all of you. So thank you for tuning in. I wish you all a great 2025 for trading, a great week for the week of January 13th, and a good month. So yeah, I'll talk to you soon.